Don't buy company stocks. Don't invest your hard-earned money in buying company stocks. Yes, I'm sure that is what you want to hear because many people seek for information that validates what they already know. And when you give them those kind of information, they are so excited and they are very happy to implement it in their lives. And that is why most times you discover that you are not making progress because you don't want to let go of what you know. So, this life, the people that make progress are people that are ready to unlearn in order to relearn. You must be willing to unlearn. If I didn't succeed in this particular thing, so why didn't I succeed? Trying to know the reason and not actually finding someone to cast your blames on. Yes, most people that lost their monies in stock market are people that have shown not to have patience, are people that have shown not to have the right information, not to have the requisite knowledge to cashing out from stock market. While people are busy advising you not to invest in a wealth creation tool like stock market, people like Otedola, people like Elumelu are cashing out big time from the same stock market that you are trying to paint a bad name. Few months ago or few days ago, it was all over the social media that Tony Lumelu just acquired a $750 million facility from Afrexim Bank, and everybody was like, wow, what's this man trying to do? People that are smart, we were watching, trying to know this man's next move. What is he trying to do? He acquired this and he owns UBA, he owns Transcorp, he owns Hairs Energy, and then he has all this money. But of course, people that are in business know that most times it's cheaper to fund an investment using loan instead of equity, and that is what most businessmen understand. So that is why sometimes you see them, they are the ones that always borrow a lot of money while poor people are trying to see that they manage the little one that they have. Let me tell you the truth. The hard truth is that you can't build wealth with your own personal money alone. It's not possible unless you come from a family that is very, very wealthy. Like people are trying to raise money from you through equity. But if you don't have that kind of advantage, my dear, the best way to build wealth is through using other people's money. That is through loans. Using loans, well calculated loans. Loans that, the ones we call good loans. Because of course there are bad loans and good loans. So you need to, learn how to leverage on other people's money in order to build wealth. So back to what I was saying. What is even stocks? Stocks is a unit of a company's, a unit of ownership in a company. So when you buy stocks or when you buy a company stock, it means you now own a unit of that particular company. Depending on the amount of stocks that you were able to buy, you can own 1%, you can own 2%, you can own 3%, just according to the level of money you invested in that particular company in buying their stocks. So while other people are advising you to run away from investing in stocks, other big names are acquiring and amassing more stocks. The other time, it was, I think 2 weeks ago, it was on news that Otedola just increased his stake in First Bank by using 14 billion naira. He invested 14 billion naira to increase his stake because he already had millions of shares, billions of shares in that particular company, that is First Bank Nigeria. Of course, and it was also on news that he made about 896 billion naira after selling off his stocks in Geregu, the stocks he held for 12 good years. 12 good years. So that is it. So how do these people even make money through stocks? They make money through capital gains. That is, if you buy, for instance, you buy a company stock for 2 naira, and then few months later or few years later, as the case may be, that company stock is now selling for 4 naira. So that means you are making a capital gain, a share capital gain of 2 naira per stock, then multiplied by the volume, the total number of stocks you were able to acquire. Then they make money through share capital gain. They make money through dividend. Dividend is just simply a kind of thank you from that particular company that you bought from, like telling you thank you for holding our stocks, or thank you for investing with us. So dividends are gotten from the profits that the company made in a particular year. Most times, some companies can pay in quarters, some company can pay 2 times in a year, and some companies can also pay once in a year, depending on the managerial decisions or the management decisions of that particular company. So that is how people make money through stock market. So now, why am I advising you not to invest in stocks if the stock market is this juicy? Number one, why I'm advising you not to invest in stocks is, number one, if you don't have the requisite information. So that is why you need to really, follow channels that are really making so much money from the stock. Like, if you are following this channel, you won't be making a mistake, because I've done several videos on how to buy your first stock. I've done several videos on how to invest in treasury bills. I've done several videos on how to, maximize profits, or how to earn profits, or how to earn income from the stock market. So you need to leverage on people that already have the right information for you to invest in stocks. Then number two reason why you should not invest in company stock is if you don't have patience. Yes, if you don't have patience. You know the difference between the poor and the rich, or people that are in a poor state and people that are in a rich state, is because the people that are in a rich state understands the game of patience. They understand the game of playing in the long term. While the people in a poor state, they focus on instant gain, instant profit, instant gain. They don't have the requisite patience. They don't have patience at all to even wait for 2 years, 3 years, 4 years, 5 years. All of us are busy celebrating the so much wealth or so much profit that Otedola made from Geregu. We are not also celebrating that this man invested his money for 12 good years. Yes, 12 good years, lots of things happening up and down in the stock market, but he still maintained his stand. He was there for 12 good years. And of course, stock market always rewards patience. Yes, it rewards patience. So that is why I'm saying, if you know that you are not a patient person, if you know that you are somebody that does not have patience, then you are not supposed to be in the stock markets. You are not supposed to be in the stock market. You are not supposed to be in the stock market. I'm emphasizing it. And that is the reason why most times you find people in a poor state, they engage in some kind of activities like gambling, playing lotto, playing games, and gambling. They gamble the little resources they have with the intentions of making instant huge rewards. No, that is not how the world works. It doesn't work that way. Rich people focus on processes, while the people that are in a poor state, they focus on trying to make immediate gain. I've had some kind of people asking me, say, Chikwesiri, what should I do? I want to invest in stock market. You have been talking about this stock market a lot. I want to invest in stock market, but tell me, how many months will I cash out? How many months will I cash out? You see, that is the mindset of people in a poor state. And when you tell them that it's something that has to be, or you have to cash out in a long term, most times you discover that they draw back. They don't want to invest. Yes, they don't want to invest their money because we are not talking about long term. They want something that they want to cash out instantly. And most times you discover that they use this money to go and play lotto. They use this money to go and play gambling. They use it to go and play gambling, and at the end of the day, they will lose it. One thing that I have come to understand in this life is that sometimes we look at long term, we think that long term is too far. We are, who knows, are we going to be alive? Who knows how many years it's going to take us, and blah, 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 blah. At the end of the day, you will discover that that 10 years you think is too far is already at your back door. It's already at your door, knocking. Yes, 10 years you think is too far. It's already here. It's already there, knocking, looking at you, begging and crying that you did not invest in it when you were supposed to do 5 years or 10 years ago. It's already there. And before you know it, you are old. You start regretting the road that you did not take. So that is why I'm saying that if you know that you are not a patient person, don't invest in stock, because the stock market will always make some kind of funny movement that most times people, especially the people that are in a poor state, people that don't have the right information or the right guidance, they will now go and sell off their stocks. And when they sell off their stocks, you will see that these big guys, the people that understands patience, the people that understands the game, they will be buying while you are selling. They'll be buying while you are selling. And then when you think that everything has stabilized, you now want to go and buy back. You now discover that the share unit or the price unit of a particular share has gone up. So you'll be always be buying when the share price is always high. And then they'll be waiting when the share price is low. That is when you are leaving the market, they are buying. When you are coming into the market, they are selling. So that is actually how it works. So if you know that you don't have patience, please stay away from the stock market. Then number 3, if you know that you don't have a steady source of income, please avoid the stock market. Why I'm saying this is that stock market, as I said, is a game of patience. It's a game of long term. It rewards patient people. It rewards people that understands the game of long term. So if you know that you don't have a source of income that can cater for your personal needs, that can cater for your emergencies, and you are thinking that you want to carry all your monies and put in the stock market, and then before you know it, the next day somebody is calling you from village, the next day you now have a personal need, or the next day you want to buy food, you are now going back to the stock market to go and sell some stocks in order to, buy food for yourself. No, you'll be losing so much money. You don't need to go there. You don't need to. So that's why if you are a follower or a keen follower in this YouTube channel, I always talk about the power of consistency. Yes, the power of consistency. Even if God bless you today with 2 million naira, I'm not one of the people that will advise you to carry that 2 million naira and invest all of them in stock market. No, I will not do that. Instead, I will advise you from that your 2 million naira to look at your expenses for the next 6 months. Keep it aside, probably in a high interest savings account. Then you now remove your day-to-day, upkeep. Yes, you now remove emergency funds. Then whatever thing that is remaining that you know that you are not going to be needing in the next 2 years, 3 years, then you can now put it in the stock market. And not only putting it in the stock market, I prefer you use that 2 million naira to create a business that probably can be giving you like a daily income. Then from that daily income, you now take a percentage and be investing consistently in the stock market. Yes, that is how it works, so that you will not be running there. Your landlord is asking you for rent. You want to go to stock market. You now you want to go and hang out with friends, have social time out with your friends. Then you are running to the stock market. No, it doesn't work like that. You are going to be losing massive money. So if you know that you don't have a steady source of income, please, the stock market is not really good for you. And then another point there is that please don't borrow money to go and invest in the stock market, because now we are hearing about Elumelu. borrowing $750 million and buying 20% of Seplat. Yes, he bought stocks of 20%. He owns 20% stake right now. I think he acquired that stake for $500 million. That he collected $750 million. He used $500 million to invest in Seplat. So to own 20%. Now, don't do like Elumelu. Don't say that I told you, because I will not advise that. Remember that this man that we are talking about, he is the owner of UBA. Yes, he's the owner of UBA. This man we are talking about is also, his wife is now the chairman of Transcorp. This man we are talking about is the chairman of Hairs Energy Limited. You see? So he has, he even have the money. If you want to buy it without actually collecting the appraising loan facility, he has the money to do that. But of course, rich men or business people understand that most times it's good to use debts to finance a project instead of using your equity, especially when where your equity is actually doing well. So you don't touch it. You allow it to continue producing wealth for you, which of course will serve as a pool from which you will collect resources from to pay back any kind of debt obligation that you have incurred as a result of starting a new business or expanding. As you can see, you know, I said in one of my videos that please don't use loan or don't borrow loan if you are starting a business. So that is also what Tony Elumelu just did now. He's not starting a new business. No, he's expanding. Expanding is different, because I just mentioned the businesses that are attached to his names now, to his name now rather. So you see, so he's not borrowing money to start a new business, to fund a new business. Rather, he's expanding into energy. He's very grounded in banking. He's very grounded in hospitality. Now he wants to make a footprint in energy, in oil and gas. So that is why he's borrowing. So even his assets from banking and his assets from hospitality is even enough to fund that. But of course, as I told you, that sometimes debt is a better option to fund an expansion, to fund a business, and that is why he did that. So if you don't have a source of income, don't invest in stock market. If you don't please don't borrow loan to also invest in stock market, because you will really you will regret it. Yes, you will regret it. You will regret it. Then another one I want to talk about is don't borrow loan to don't invest in the stock market if you know that you don't really understand business structures. Yes, you need to understand business structures. That one I may not really emphasize so much on it, because of course there are information out there. So you need to really take out your time to, you know, look for somebody that can actually guide you, somebody that understands how stock markets function. Don't do that. Don't do that. So you really need to make sure that you get the right person that will help you to answer some kind of salient questions when it comes to stock investing. And of course, that is why we are here. We are here to help you. Yes, we are here to help you. And the only thing that you can do for us, the only thing you can do for us in this channel is to engage us in the comment section, is also to comment, like, and subscribe. You're not paying anything. That's the only thing you can do for us to help other people to also see this video. Yes, to help other people to see this video. And another thing that another reason why you shouldn't be investing in stock market is if you don't have emotional stability. Yes, stock market is filled with emotions, bias, lots of emotions, and that is why you see people falling to, you know, social media, chasing social media clouds, you know, trying to adjust their portfolios according to what they are hearing, the social media hypes. They are pursuing it. They are not sitting down to really understand how what they are investing on works. Instead, they are busy pursuing social media hypes. From today they will hear that Nvidia is the stock of the moment. Everybody, boom, they will just run and sell maybe their Uber. They are investing in Nvidia, and before you know it, the Uber they've sold is now growing. They will now sell Nvidia. So you just be losing monies, and because you are pushing social media hypes, you don't even understand what you're investing in. So that is the reason why, if you know that you don't have emotional stability, please avoid the stock market, because it will now bring a bad name to the stock market. I must tell you that the stock market has become a major tool of wealth creation. Yes, a major tool of wealth creation. Think about Femi Otedola, think about Warren Buffett, think about Elon Musk, think about all these guys. They really made so much money from the stock market. Yes, so much money. Their value is really, really in the stock market. That is their wealth creation tool. So you need to really master it. You need to take out your time to follow the right people, to understand how these things work. So that is what I have to talk about today. Of course, this is my YouTube channel, Invest with Chikwesere. Here in this channel, I teach you smart investment ideas using investment tools and platforms like the stock market, the real estate, treasury bills, ETFs, mutual funds, bonds, and others. You cannot afford not to stay with me in this channel. Please, like what I said, click the subscribe button, like my videos, and also comment in the comment section so that we can have a robust interaction on how to build our wealth. I will see you in the next video. Bye for now.